Hey, welcome to this video. We're going to be looking at the cash flow dashboard, just basically how to set it up and some basics of how to use it. I just want to remind you the goal of this thing is really to be able to use our financial planning tools as a forward-looking, real-time decision-making tool so that we can be super intentional with how we're using our money. The idea is whether you're using this tool or a different kind of tool, that at least once a month you're sitting down to look at where am I at so far in the year, how much have I sold, how much have I spent, versus where did I think I was going to be at this time of year, and then to take corrective actions as you see fit. Because the only time that you can get things back on track is during the summer, in the real time. Once it's all said and done, it's too late. And so the idea here is to have a tool that supports us to be super intentional with our money and to be able to really relax and not have that sort of background doubt of like, am I making money? Do I have money? Can I really buy this? And just free ourselves of that anxiety to really fully focus on what we love doing in life. So there's the first tab here. 2019 forecast is where we're basically just going to plan out what do we imagine is going to happen this year. So yeah, let's just start. Let's start by imagining this super simple farm that sells at farmer's market and wholesale. And so here you would enter your 2018 amount. Let's say last year we sold $25,000 at farmer's market and $10,000 wholesale. And so this year we'd be like, well, how much are we going to sell this year? So the first approach is that we actually go over here in the months and distribute it. So let's say 4,000, 6,000, 75, 8,000, 75, and October, let's say 6,000. Boom. And my numbers aren't as nice as I'd love. Let's say 9,000 in August. Boom. So that's like what we would like. And so over here we see, it's automatically adjusted itself to 40,000. And so that's the first approach. The other approach is to really go the other way around. To be like, okay, well, let's say this year I want to sell for $15,000 worth of stuff. Given that last year I sold 10,000, and I think that this would be a reasonable increase. By the way, 50% increase is a huge increase, but this is just a fictitious scenario. And so let's imagine, we're going to start selling wholesale, and it's going to be, pretty steady. It's going to be $3,000 a month, all through the season. Boom. And so one thing I'd like to show you is, let's say I had not done that. Over here, you notice there's a column that says difference. So the point here is that everything that's in the total forecast needs to be distributed month by month. And this column, difference, has to be down to 0. And so then we go over here, we say, all right, well, we're missing 3,000. Boom, that's how it happens. And we're down to 0 for the difference. Super important. The next thing I'd like to bring your attention to is the safety margin. So both the sales and the expenses have a safety margin included. You can determine your own safety margin in this yellow box. In this case, it's set for 5% for sales and 7% for expenses, which I consider to be good starting points. And this is automatically calculated as a negative number down here to just give ourselves a little buffer throughout the budget. So the next step is, I forgot. This should be the first step, is planning our profit. How much money do I want to make this year? Boom, profit. So we say this year I want to make $15,000, and well, you know what? I need to have this money every month, and so I'm going to say this is equals $15,000 divided by 12. Up. Like that. So that would be the first step. It's just planning out the money that you want to be making. The next step is all your expenses. So in this case, super simple farm, we have seeds, we have compost, and we have labor. So, and, we would enter the amounts from last year. Let's say it was 2,000, 5,000, and I don't know, 10,000. I'm just making stuff up, And so then we would say, okay, well, when are we going to buy the seeds? Okay, the seeds, it's going to be in January. We're going to do our seed order, $2,000. Our compost, well, I can take that one out because I'm actually going to put a real number at this point. So that's going to be in April. It's going to be, oh, yeah, and that would be a little higher actually because seeds last year was 2,000, and since we're increasing, let's say 3,000, and then same here, let's say, okay, we're increasing, boom, and then labor. Well, let's see, how much would we be spending on labor? You could sort of figure it out. I'm just going to enter some really random numbers. Let's say, 40 hours a week? 400. Yeah, so let's say, okay, we're going to be paying someone up all the way through the October, up. And once again, this one here is not necessary anymore. So yeah, so that's really it. You're just planning out your expenses, and then all the way down here at the bottom, you've got once again the safety margin, which is automatically calculated, as you can see. See here, the numbers are just automatically coming in, and then you have the tax, which you're paying, but that in theory you'll be getting back. And so there, down here too, this is just right now it's just set up really for you people who are familiar with spreadsheets. It's just set up as a sum. Times this cell over here, which is the 15% tax. And so, yeah, I would just say don't forget to also plan the money that's going to be coming in when you file for your reimbursement of your GST, HST, whatever, in whatever province you're in. So that's the first step, is just planning it out. And basically, down here, what we want to see is that this number needs to be positive, right? Because we've included our salary in the budget, and because we've included safety margins, we're not aiming here. It has an $8,000 surplus, but that's probably not realistic. We could just imagine that we're also going to be, let's say, we're going to be spending something else. What else? We're going to be packing materials, and it's going to be $8,000. And we're going to be buying half in February and resupplying in August. Boom. Let's just imagine that's how it is. And here you see, I just want to point out again, oops, difference is 1, and that's because there's this little random 1. Difference is 0, perfect, everyone's happy, we're good to go. And so now we look down here, oh, we're now into the negative. How did that happen? Oh, because of the safety margin. Sorry. This is the problem with just making up numbers. Not the way to go about it. Up, boom. So now here we are. We see that we're at $700, net income, which is fine because we've already planned for safety margin and we've already planned for our salary. And the last thing that's left to do is just to make sure that we'll have enough money at all times of the year. So we can go over here and we can look at the opening balance, and we can say, okay, well, right now I have, $20,000 in my account. Oh, and here's one thing that's great. So this is a heads up. So everywhere where there's sensitive things that you probably shouldn't mess with unless you know what you're doing, there's a little message that comes up that says, heads up, you're about to change something that shouldn't be changed accidentally. And so in this case, opening balance, you're good to go. You can adjust it. Boom. So here, $20,000. And so when we look at this, what we see is that we have a problem in April, a cash flow problem coming up in April, where we're going to be at negative 4,000, and then May at negative, 1,700 again. And so that would be a problem. So we can just go up here and see, well, what could we fork around a little differently in order to make that cash flow problem go away? We could say, okay, well, look, packing supplies, we're actually going to buy them in May, and how does that look down here? Does that make we still having some cash flow problems there in May. And so what we should probably do is go up here and say, well, look, you know, I'm going to just reduce my salary here to 500, 500, and then 500, and so that's going to be, and then I'll just offset it once the cash comes in really big time in July and August. So 2,000, 2,000, 2,000. And am I still coming out to the right number? Yes! My difference is 0, and so I'm still coming out to the right balancing number there. So now, what's going on with our cash flow? Up, we see, okay, great, we're over, you know, here in May it's coming down pretty close to the line, which is not really a comfortable situation, so we would just go back. But I'm not going to spend hours trying to get this spreadsheet to look just all super perfect, because ultimately I'm just making shit up, and so this is up to you to get your real numbers. But I just want to illustrate the one way this thing can be used. You say, oh great, now we see that having moved around a little bit our expenses, we're not going to run into that cash flow crunch. So that's basically what you need to know about setting it up. And I see we're already at 11 minutes, so I'm just going to stop right there and make a separate video to show you how to use it once you're going. So to recap, most important things are to plan your profit, first thing. Second of all, to make sure that you've always distributed in the months the same amount that you've forecasted in total. And thirdly, it's just to make sure that in the expenses you always have $1 in January and $1 total forecast at a minimum, so that the future functions can work. So great. Hope you enjoyed this, and I'll be making a second one momentarily. All right, see you soon.